Hello, Oracles. Well, what can we expect from the market this week, the week of November 4th, 2024? So, this week we have a couple of very big things going on in the whole macro environment. We've got the election, of course, that is going to be happening and finalizing on Tuesday. Of course, based on last time, we didn't know the results officially for a while. So, we'll see how this one plays out. The market hasn't been reacting like it typically has when it comes to elections in the past, where typically we see a sell off in September and October. We've seen a run up. So a little bit of selling this past week, but not anything like we've seen in the past. So we'll see how this election is going to play off. Are we going to get a sell the news situation? Are we going to pop from here? We shall see. After that, we have the FOMC meeting that is starting the day after. So we will have the election on Tuesday. FOMC starts on Wednesday. And then on Thursday, we are going to be getting Jerome Powell coming out and telling us what the Fed is going to be doing for a rate cut. So we'll get into all of that information, other things that we can be seeing going on this week when it comes to moving the market one way or the other, any other earnings that are going on. And we'll take a look at that. Just make sure that you guys hit that like button down below, subscribe to the channel, and we'll jump right into it. All right. So again, the election is going to be going on. Some people are saying if Trump wins, the stock market's going to go up. If Harris wins, it's going to go up. If we get a divided government, that's what the stock market wants anyway. And chances are that's what's going to happen. So I don't know truly what's going to happen. Nobody knows what's going to happen. Everything at this point, I don't care who you are, it's all speculation. So for me, I like to do what I do best, which is sit on the back, just wait and observe, see what happens, and react accordingly to whatever happens. If we end up getting a sell off, I'll take it as a buying opportunity. If the market goes up, I'll add more money to cash. That's all I'm doing. That's very simply it. I have now moved my portfolio to step 10. So I have a bunch of different areas that I'm kind of taking it to the next level and adding to my portfolio in certain areas, but I still want to maintain that 10% cash. So again, based upon my portfolio, I'm just waiting to see what the market gives me and I'll take it from there. So nobody truly knows what's going to happen. But again, I think it's going to come down to take a look at not just the presidential election, but all the other elections that are going on as well when it comes to the Congress and Senate, because between all of those, if we get a divided government, typically the market likes that because that means that there's less spending that's going to be going on because there's going to be a lot more wheels turning when it comes to lawmaking and a lot harder to get things that get passed. And because of that, lower spending typically means it's better for the market. So we'll see how that all plays out this week. Then we also have the FOMC meeting that is going on. As I said, that's going to be starting on Wednesday and finalizing on Thursday. So Thursday afternoon at 2 o'clock, we're going to be getting the next rate cut. Right now, the market's basically going to be saying that we're getting a 25 basis point cut. Based upon the jobs data that we got last week, inflation is down. Inflation's looking great, but jobs data is not. Jobs data is looking very weak. And again, this is something that I've been talking about is pay attention to the trends that are going on. We saw one good number in September, but it kind of seemed like it was a little off and it wasn't really, consistent with what we had been seeing. So I wanted to see the trend. Sure enough, trend is going in the opposite direction. And so because of this, the Fed is most likely going to be doing a 25 basis point cut. And looking at the fact that even companies like Visa, who are crushed earnings and are doing extremely well, they're still cutting 1,400 jobs. There's a lot of companies out there that are still cutting a lot of jobs. And they're cutting their jobs because there's concern about the market and what's going on out there. So they're doing all of this as well. That in turn is going to spiral. And these people who don't have jobs are then going to have to start going out there and finding another job, but there's no job openings. So now less people are going to be spending money. It kind of perpetuates itself. So there's less people spending money, less income and revenue coming into these companies, therefore less money on the bottom line. In order to keep that bottom line growing, they're going to have to cut expenses. What expenses are they going to cut? Payroll is the number one expense. So seeing a lot of layoffs typically perpetuates more layoffs. But because of the fact that it's such lagging data and it takes time, and Visa's like, well, we're cut 1,400 jobs by the end of the year. So it's not like an immediate 1,400. So this is like a trickle effect. So more and more people are going to be losing their jobs over the next couple of months. That is then going to take some time and a lagging effect to get that data coming in. And then it's going to take time. So it's going to be like first or second quarter of next year that we really start feeling the effects of a lot of these layoffs that are going on. And again, that just perpetuates more layoffs. Just something to pay attention to. And again, this is why the Fed is most likely going to be cutting that 25 basis points because they're trying to get ahead of this to kind of spark a little bit more of the economy and not have those layoffs happening. But the Fed always reacts super slow and they use lagging data. So we're already behind the curve on this. And chances are they're going to be too slow this time as well. And this is why I have been preparing for a recession, hoping that we get that soft landing, but I truly don't know. And this is why I'm really paying attention to what the Fed does this week. Again, typically Again, it seems like they're going to be doing a 25 basis point cut. We'll probably see another 25 basis point cut in December. That's what had been anticipated from September. That's what I've been talking about as well. It was 50, 25, and 25, and we'll get a full 100 basis point cut by the end of this year. Just got to pay attention, see what's going on, and we'll kind of track that forward. But this week, that's what we're seeing is that 25 basis point cut, most likely on Thursday. Now, this week, we do still have some earnings. Now, we had really the big earnings week was last week with the Magnificent Seven stocks coming out. This week, there's not as many huge earnings that we're going to be seeing out there. Some notables. We'll have Palantir on Monday. We're going to have Airbnb at the end of the week. We've got Hershey Company coming out at the end of the week. We've got SMCI coming out on Tuesday. So we'll kind of get some information after that fallout that we saw over the last week. When it comes to all the fraud claims and things that are out there for them, we'll see how they kind of try to recover from that. But that's really it when it comes to the earnings this week. Again, there's a lot of earnings, but nothing that is major, nothing that is anywhere going to be eclipsing what we had seen. I mean, if we had election and FOMC at the same week that we had the earnings like we had last week, it would have been total madness. But we've gotten through those earnings. We got relatively decent numbers, but we did see some kind of uncertain forecasting when it came to some of even the bigger players that are out there. So kind of just taking a look at the broader picture, looking at all encompassing everything that's out there, seems like even a lot of these companies are uncertain about what we can expect next year. And again, we have the election going on this week, which is going to lead to more uncertainty. Now, with the election, we could get some clarity from that because we can say, all right, we know that this party is going to be in power. This party is going to be president. This party is going to have Congress. This party is going to have the Senate. Then from that point, we can have the entire market start to kind of find a better footing as far as what we can expect for at least the next 2 years before we get the next midterm election. So we might see some settling, but it could be a very uncertain month. And just because we might get some clarity this week, we could still see some uncertainty for the rest of the month. So just the things to pay attention to this week. And then the other extremely important thing that is going on this week is my birthday. So my birthday is going on Friday. I'm also looking to be having Darth Dividend on here. He and I are trying to finalize which day this week we are going to be having a live stream. So I'll keep you guys posted on what day we're going to be doing that. My birthday, I don't have any plans for my birthday, so I might do a live stream with you guys. I might just kind of do something different, and I'll do a live stream on Thursday. I'll keep you guys posted on all of that when it comes to what's going on for the different shows this week. But at that point, I can kind of see everything settled. So we'll, again, be through the election. We'll be through the rate cut. We'll have some semblance and idea as to what's going on. So on the live stream that we do at the end of the week, we can kind of discuss and say, all right, this is where we're at. Now let's kind of formulate a plan going forward, because that's exactly what the market is going to do as well. And if you guys didn't see it yet, I did post a video earlier today, 2 in one day. I know it's crazy, 2 videos in one day, but I wanted to put out a video to show you guys what I made for all the October dividend payouts. And I also added a big educational piece into that where I broke down what I've been doing for my budget and my finances and all of that to get to the point where these dividends are going to start growing and kind of putting it all together. So on a monthly basis, I will end up doing that, and I'll try to, improve upon it on a month-to-month basis. But really just showing you guys what I did to get myself from that $75,000 in debt to over $200,000 net worth in 8 years. I want to share with you guys what I've been doing and kind of show you just the entire plan that I've been using to get myself to that point. So if you guys haven't checked out that video, make sure you do so. Otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.